Did you know that the average price of groceries in the USA has surged over 25% in the last 2 years? That's right. If you think prices are high now, wait until you hear what's really driving this madness. Hey everyone, welcome back to the channel. Today, we're diving into a topic that's affecting all of us in 2024, the skyrocketing costs of living in the USA. Whether you're filling up your gas tank, buying groceries, or trying to find affordable housing, it seems like everything is getting more expensive. So, what's going on? Is it just inflation, or is there more to the story? Stick around as we break it down and explore the factors behind these rising prices that are impacting your wallet. Presentation of problem/challenge. Alright, let's get into it. The main culprits behind rising prices can be boiled down to a few key issues: inflation rates, supply chain disruptions, and shifting consumer demand. Inflation, as you probably know, is when the general price level of goods and services rises, leading to a decrease in purchasing power. Right now, the inflation rate is hovering around 6%, which is significantly above the Federal Reserve's target of 2%. This is causing the prices of essentials like food, gas, and rent to shoot up. Next, we have supply chain disruptions. Remember when the pandemic hit and shelves were empty? Well, we're still feeling the effects of that. Shipping delays, labor shortages, and raw material shortages have created a bottleneck in the supply chain that's causing prices to inflate even more. And it's not just a temporary issue, it's a long-lasting problem that businesses are still grappling with. And then there's consumer demand. As the economy continues to recover, people are eager to spend again. This surge in demand is putting even more pressure on prices, especially for products that are already hard to come by. It's a perfect storm of rising costs that we're all feeling in our day-to-day lives. Exploration/development. Now, let's dig a little deeper into each of these factors. First up, inflation. The Federal Reserve usually steps in to manage inflation by adjusting interest rates. When they raise rates, borrowing becomes more expensive, which can slow down spending and help bring prices back in line. But here's the kicker: raising interest rates can also lead to a slowdown in economic growth, which can cause its own problems. It's a delicate balancing act that can feel frustrating for everyone involved. Next, let's talk about supply chain issues. The pandemic exposed just how fragile our supply chains are. Even though we've seen some improvements, global events like the ongoing conflict in Ukraine and lockdowns in China are still causing major disruptions. This means that many products, from electronics to everyday household items, are still facing delays and price increases. Companies are also facing higher shipping costs, and guess what? They pass those costs on to you, the consumer. And what about government policies? The current administration has implemented various stimulus packages to help citizens cope with rising costs. While this has been a lifeline for many, it also injects more money into the economy, which can exacerbate inflation. It's a classic case of trying to help but also creating unintended consequences. Lastly, let's not forget about changing consumer behavior. The pandemic shifted how we shop. More people are buying online, which has led to increased demand for delivery services and logistics. This shift means that companies have had to ramp up their operations, and you guessed it, those costs can end up reflected in higher prices for consumers. Climax/key moment. So, what's the most surprising insight into why prices are skyrocketing? It's the realization that it's not just one factor at play, it's a complex web of interconnected issues. While inflation gets the most attention, it's the supply chain disruptions and changing consumer behavior that are equally significant. What's even more alarming is how these factors can have a ripple effect, leading to a cycle of rising prices that could last for years. As we head into the future, it's crucial to understand that these price hikes are not just temporary, they're indicative of a systemic issue that could change the landscape of our economy. Conclusion/summary. To wrap it all up, we've explored how inflation, supply chain disruptions, and shifting consumer demand are all contributing to the rising costs we're experiencing in 2024. It's essential to recognize that this is a complex issue with no easy fixes. As consumers, understanding these factors can help us navigate our finances better and prepare for what's to come. Remember, it's not just about the prices going up, it's about the larger economic landscape that's influencing our lives every day. Call to action, CTA. Alright, that's it for today. I want to hear from you. What are you noticing in your day-to-day life regarding rising prices? Drop your thoughts in the comments below. And if you found this video helpful, make sure to check out my previous video on economic trends and inflation. Trust me, you won't want to miss it. Thanks for watching, and I'll see you next time.